Hey, it's Todd Ault, and welcome back to Wall Street Words. Today's word is buyback or stock buyback. Now, this is when a company buys back its own stock. Now, why would a company buy back its own stock? Well, that's actually one way of rewarding shareholders. Let me give you a real-world example of this. And many years ago, Berkshire Hathaway, led by Warren Buffett, bought Coca-Cola, bought about 10 million shares. And about those 10 million shares a long time ago. Coca-Cola has been buying back stock ever since. Now, they may pay out a dividend, but they may have excess cash, and they want to reward shareholders by shrinking the pool of capital. So therefore, if you're a shareholder like Buffett that had 10 million shares of Coca-Cola and they bought back stock, if you kept your 10 million shares, the amount outstanding would go down and your ownership would go up. And that's a reward. Less shares out there means the company could be more valuable if they continue to earn more money. Now, there are other reasons why to buy back stock. There could be an activist shareholder that they want to get rid of that has a large block of stock. They could simply want to shrink their pool because they don't have a use for the capital, and it may be a more efficient way of rewarding the shareholders than a dividend. Today's word is stock buyback, and this is a huge component of the earnings of the S&P 500, and successful companies buying back their stock is part of American capitalism.
Hey, thanks for watching Wall Street Words. Please subscribe and hit that bell below. If you think this video adds value, please share it with somebody. By the way, if you want to watch more Wall Street Words videos, there's 2 videos right here you can watch right now. There's new videos every day. Thanks for watching Wall Street Words. Always great things happening here.